All right, welcome everybody to the Closing Beat. Happy Thursday. Man, this week's gone by kind of quick. If you're watching this is our stock market update that we do. We're financial advisors at Jazz Wealth Managers, and I wish you the best if you're in one of those northern areas that are getting the snowstorms. We're in Florida, so thank you to those of you that are getting the snowstorm, because when the wind blows, it blows cool air down here. Just picture us in Florida with the windows open tonight, enjoying it for the first time this season, I believe. We'll see how cold it stays. Also, know that next week, Monday, Tuesday, Wednesday, Thursday, and Friday, we will not be doing the Closing Beat. It will be a calm, sort of insignificant week in the markets, maybe not the first 2 days, but we got a lot going on here, and we're going to let everybody have time to travel for Thanksgiving, as I suppose you may be visiting family as well. I will wish you the best, but there'll be no shows next week. We'll be off the entire week from the shows. We'll, of course, be in the office for the first part of the week. Anyways, if you're one of our customers tonight, we have Wine and Wealth. We're going to talk about sector ETFs and just sort of have fun with that. We'll, of course, take your questions on specific stock picks and things that you may be working with, but we'll cover sector ETFs, kind of dig in a little bit there. If you can make it or want to watch it live, the email is, you have an email with the link. Otherwise, you can just click that link anytime and watch the replay. So that is that. Looking off to the left here, if you're joining us for the first time ever, actually, I'm going to ask you to go watch yesterday's video, because we've sort of blended the 2 days together. Because anytime we see something we can help you with, we'll tell you ahead of time rather than say, told you the markets were going to go higher today. We don't want to say that. We like to sort of teach and show. This is what we do with our customers. We'll teach you what's happening and how things work beforehand. So when you see something happen on Wall Street, you understand exactly what happens. Anyways, if it's your first time, off to the left, you can see the three major indices on the screen there. Great day, right? Basically 1% and almost 2% if you look at the Nasdaq 100. And if you see what happens today, any attempt to sell off was bought up, and that support that we showed from yesterday did continue. You had some trade news out there that it was a report actually that the US and China were doubling down on their efforts to work out a trade deal. So they're just trying to keep things going here. So you think that they are working hard, and I'm sure they are. But there's a big meeting coming up later this month between both presidents of China and the United States, where they're going to have dinner and I guess talk about the trade war thing. So I don't know. We'll see. Know that that was part of the reason for the support today, because when that news comes out, you have industrials, you have all of those global stocks, the tech stocks that do business with China, or names like Intel that have a significant portion of their business in China. Of course, you know, that's good news for them if they can work it out. We'll cover a few of those names here today as well. Nonetheless, yesterday we talked about why the market was primed for a bounce, and we used the bow and arrow example. And so if you're just watching this for the first time, take a second, watch yesterday's class, because we actually explained what you would need to happen for the markets to bounce. And today, that is exactly what happened. So let's dive in and just go through it here real quick, and then we'll cover some of the news if you happen to have a moment. Okay, here's the S&P 500. We talked about the support yesterday that it was trying to put in place around the 2,700 number. We actually showed on the screen the minute by minute where that support came in and the volume came in and helped the markets. And we said that's probably going to start marking a support area here in the short term. Now, to get there, of course, we had to have the banking stocks. We always mention that. And today we did. Maybe it was good timing for us to find out or dig into what Warren Buffett has been buying. We'll cover that in a minute. But basically, he now owns a ton of different banks, and JP Morgan is one of them. Either way, you had the banking stocks higher today, a great reversal, almost recovering everything from yesterday. And like we said, the banks were oversold and due for a little bit of a bounce. You got that. Because you get that, you get a little support from the markets. Now, to have a decent rally or a strong rally on the day, you need tech stocks. Well, the tech stocks were higher today, in particular the chip makers, very important. And of course, that's trade news, because you need, well, if you think of like MU and AMD and Intel, the exposure they have to China, of course they want to see things go well between the US and China. It means better production for them. Also add to that the chips that they're making, there's a bit of a slowdown in the industry right now, so they need all the good news they can get, and they got some today. So the semiconductors were your best performing area of the markets today, up just over 3%. Put the banking stocks with your semiconductors, put those together, and you have a recipe for a market rally. Now, like we said yesterday, this is a little bit of a support area here. We do need all these areas to kick in. We also could use the help of oil and energy. Well, we got that today as well. We got energy helping to push things higher as in addition. So you got your banks, you got your tech stocks, you got your oil and energy. That space did well today. And then the final icing on the cake was Apple, right? Apple was a big decliner over the past few days and, of course, a big headline stock. So to see Apple recover a little bit, and it was a little bit, right? It was not like this was an amazing recovery, but it was enough to put all those pieces together, and thus you have a recipe for a stock market rally. So when you think about the stock market and you watch yesterday's class versus today's, the closing beat yesterday and today, you're able to say, oh wow, I don't need to know what pot stocks are doing. I don't need to know what crypto is doing to understand the markets. I just need to understand a few little pieces of the markets, and we broke down how every little thing works so that way you now know. When someone says, you think the market's going higher or lower, you can say, give me a minute, let me see. You don't have to say, give me a minute, let me call Dustin and see what's happening. You can actually just do that top-down analysis and go from there. Something I love to do, and of course we're doing it that's what we do here. So that's that. Okay, in the banking sector, of course, you're going to see in the headlines today, I can't type. JP Morgan, higher by 2.5% today. Warren Buffett at Berkshire Hathaway, actually it was his top stock picker that picked the stock, but Warren Buffett always gets the credit because it's Warren Buffett, right? They decided to buy $4 billion as of, now this is important here, so let's take a second on this one because you're going to see some misleading things in the headlines. They have about a $4 billion stake in JP Morgan now. Remember, Warren Buffett owns, personally, likes to own JP Morgan as well, so he already owned it. But the company now has a $4 billion stake in JP Morgan. What this report, the 13F that everybody's looking at that they're talking about, ends in September. Think about it. What happened in October? Worst month on record since 2012. So Warren Buffett buys a very sizable position for most of us in JP Morgan, then suffers all of the October declines. Now, JP Morgan didn't get hit too bad, but you get the point that when you see, this is not what I was talking about where I say Warren Buffett is quiet now because he's shopping. This is old news. So this is as of the end of September. What I'm talking about is from October to the end of the year. I'm saying that Warren Buffett is shopping during this decline. So don't let the media make you think that, oh, there it is. Dustin said Warren Buffett disappeared so he could go shopping when everybody's panicking. That's not what I'm talking about. So this is a completely different transaction here. I just like to point that out. You know we're going to point out the stuff that he bought in October when the markets fell and through the rest of the year because you know he's out buying. The short story there is, look, he put on a sizable position. He now has positions in Wells Fargo, Bank of America, Goldman Sachs, New York Mellon, Bank of New York Mellon is another one, and of course JP Morgan. Do you get a feel for what the man is interested in? These are sizable positions. He even bought preferred shares in Bank of America, a whole different story. But you get the idea that he's focused in pretty clearly on this area of the market. We'll find out more, of course, as we go. Other stocks in the news, you got Oracle, 3.5% today. So Oracle, it's kind of funny. The Oracle of Omaha bought Oracle. They now have a 41.4 million share stake in Berkshire Hathaway does in Oracle. So shares were higher today. That's typically, to be honest, Oracle is typically like a snoozer. Like it's not one of those names that a lot of people talk about. So it was nice to get some headlines out of that one. Cisco, by the way, that's earnings related. They beat on earnings. They beat on revenue. They increased their pricing because of the trade war, and customers didn't seem to mind. The CEO says he's optimistic about everything going forward. That adds 5.5% on the day for Cisco. So good for them. Also going to be a Nasdaq supporter there. Some bad news. Oh, I can't type today, guys. Some bad news there is PCG. Not much good is going to come of this. Basically, this is a utility company in California. Turns out these guys could be the very reason that all those wildfires went crazy, that killed people, that obviously tore down a bunch of homes. It turns out that these guys may have caused that. So you can see on the chart the appropriate response. Add to it, now we knew this already. Today's 30% decline comes because the company, they feel, you could just see these people when they're talking. Like, I don't care how greedy you think some corporate people are, they're still humans. And if you find out that you made a mistake that caused that kind of damage, you hurt. There's nobody on this planet that doesn't hurt because of that. If it's you that caused it, of course. And you're not like a murderer, like you didn't mean to if it was an accident, of course. Why do I keep talking? Anyways, so The real bad news for these guys is their insurance company. Now, hey, have you been through this before? You get in a car accident, you call your insurance company, and they're like, we don't cover that. Sorry, you don't have the right insurance. That's what's happening to these guys. Their insurance company's like, turns out we don't cover that, right? So all the insurance you have, we're not going to cover all of it. We have pieces that we can cover. So these guys may be on the hook if they're found that they did cause it, and it seems like they're starting to try to admit to that. They may not have the money to make good on it. This could seriously, seriously hurt this company. And I know we sort of lightheartedly joke about it, but I'm saying I don't buy the whole political thing where they're on TV saying how these are your corporate fat cats trying to skimp on costs and everything. It doesn't matter who you are. You know, that happens. Nobody feels good about that. So I'll probably stay away from that stock for a while. Obviously, I'm not going to buy it or anything, but I'll stay away from commenting on it just because, that's horrible. Ford, by the way, shares down actually 2.5% today. They're finally testing some autonomous vehicles. They want to participate in the ride-sharing thing. And by the way, Ford may be one that we do sort of a more of a solid video where we just talk about Ford, because they got a lot going on. Ford is slowly saying, we don't just want to make cars. We want to be in the transportation business. They sort of made that apparent the other day. They bought Spin. You know those scooters, if you live in like Austin or like New York or whatever, there's these little stand-on scooters where you could just go like a mile or something and you use your phone to like fire it up and everything. Ford bought that. And everybody's like, why would Ford buy a scooter company? And that's because Ford's trying to move into the transportation business. They're not building autonomous cars and working on all this so that they can sell these cars. They want to be in the ride-sharing business. So yet another company trying to do this. Ford is obviously a little bit behind the game, but they need as much good news as they can get. We'll see. Also, I tweeted about it today. JCPenney. There you go. Some of you like trading penny stocks. So I tweeted out, hey, if you like penny stocks, JCPenney's about there. It hit $1.05 today. Got a little support off of that. It looks like it was up a lot, 11% on the day. It'll register on any scanner or a stock market screener that you have. But realize that's 14 cents. So just a small gain on the day after hitting basically $1. So that's all I got for you there. Thanks. Appreciate it. Your dough's looking a little like a tidal wave. I hope that tidal wave's getting ready to crash into your bank, and that's what you're talking about. Apparently, people like to, oh, yeah, it's finally I can wear it, man. I've had these things sitting around for a while. We had one sort of cold day, but today was good. Great chip day was just erased with Nvidia earnings. Ooh, yeah. There you go. Nvidia, my thing's not connected, sorry. That's not going to be pretty, yeah. What do you got, 165, 169? So if you can see on the charts, guys, if you want to take a look at this, here's where Nvidia finished. If you're not familiar with candlestick charts and you're one of our customers, let me know. Got a candlestick class. I've got 3 of them, actually, I can send to you. So anyways, you've got a gain on the day, right? Everything looks good. They come out with earnings here, and we're bouncing around a little bit at the moment. Let me just put the cursor where we're at, right? Almost off the bottom of the screen, so pretty nasty there. Now that's where it started. We'll see how it goes with the conference call and everything, but not good, not good. All right. You think the stock market's going to decline for the rest of the year? You know what I would have liked, GR, is when we sold off the other day, and technical traders look for this. When we sold off through October, you really wanted like a panic. You wanted a couple days where people wanted nothing to do with the stock market, panic in the streets, people calling me saying, get out, I don't want to be investing anymore. You sort of want that to finish off any down move. And we didn't get that. So I'm sort of on your page there, GR, because usually we get that. And we haven't seen it yet. So I get it that news is building positively right now. Who knows, what happens for the rest of the year. But I would have just liked to have seen a little more blood when things fell. Anyways. Home builders getting hurt. So if you follow the home builders, I guess, it really depends on your time frame, right? So anytime a stock or a particular sector or an ETF falls, like oil just fell. We look at home builders, they just consistently fell. We've talked about it during that decline there. When you get a bounce, especially a quick, rather rapid bounce that sort of happened back at the end of October, what happens is people that were holding the position, they go, hey, I had a loss, thanks to today's quick move higher, I have less of a loss, and they start thinking about selling for that loss, right? Whereas when it's falling each day, people, like, fear makes you go, I won't sell today, maybe tomorrow. So you're going to see a lot of that in the home builders where they pop and then jitter around a little bit, then it pops again and jitters around, because you have all year, think about it, let me go to the chart real quick, look over here. You've got all year's worth of people that are in the hole. So every time this thing pops, you see the volume spike a little bit, and maybe these people over here said, okay, I'll take my loss. Then the next time it pops, you've got these people going, it's almost the end of the year, I'll lock in the capital loss for the rest of the year, put it on my taxes, whatever I can do, and you'll see it sort of sell off again. So any long, drawn-out loss does not recover in like a V-shaped bottom sort of way. So just a heads up on that one. How do you get my hoodie? It's my hoodie, man. Where is Square getting back? When is Square getting back to their high? Not anytime soon, in my opinion. That's a rather aggressive fall lower. Look at the chart of what happened there through October. Like I always say, you fall out of a 10-story building, you don't just get right back up and climb to the 10th story. Most of us are not going to do that. I think that's the case with Square. Yeah, you gotta really dig deep on that one. I won't call it like the pot stocks that are overvalued. That's ridiculous. If you look at something like Square, is this the best price for it? Like, as an investor, is this really the best price, especially with all the underlying weakness everywhere else? If you're a short-term trader, you don't really have anything to go on. If you look over the last week there's really nothing that gives you any good news. So you got short-term traders saying, I'll come back another time. You got the investors that really dig into the financials going, I don't know, maybe like last year if I could justify this price or something because the markets were hot, everybody's positive. I don't know. If you do a little homework there, you kind of know what I'm talking about. Do you think Canopy growth will still rise over the next year or two? I don't know how you get to much higher of a valuation than where they were. 59, 60 bucks. The company's nowhere near worth that. So you seem to have attracted people to the stock that are willing to put money into it, and you've got everybody else out here going, no way I'm paying that. I used an example with a customer the other day. They wanted to buy pot stocks, and I said, okay, think about this. There's a Lexus that you want to buy. We all know that a Lexus should be somewhere between $40,000 and $70,000 depending on the model, all the fixins and the tires or whatever you put on it, but the Lexus, let's say, is between $40,000 and $70,000. You go home to think about it, you come back the next day, and the Lexus is now priced at $750,000. Are you still considering buying that Lexus? There's not a chance in hell, right? You go, oh, okay, everybody wants the Lexus. I can't pay that because I know it's probably worth, at best, $80,000 if we do some cool paint job or something, right? So you could justify a little higher price because you see the value. You can physically compare it to other things and say, I get the value of this Lexus is not $750,000, right? So think of pot stocks that way. Pot stocks are worth, a lot less than they are now, but there's a value there. Everybody was cool with that value until everybody started talking about it. It's like the Lexus. All of a sudden, everybody's looking at this car going, I'll pay $100 for it. I can pay $120. Some idiot says $150. Somebody says $200. The guy that just won the lottery and said he was going to go to Vegas, the Powerball guy, can you believe that? That guy comes along and goes, I can pay anything. I'll pay $500, right? There's always someone willing to pay more. That's where we're at with these pot stocks, man. It's not an investment for the next year or two at these prices. I'm not telling you what to do. I get in big trouble if I tell you what to do, so I'm not saying that. But that's all I have to offer for you. Thanks, Chris. I really appreciate that. Why do you think Nvidia is very volatile? Same reason for all the other tech stocks, man. It is the sort of everybody rushing into stuff and now everybody making decisions to get out. And don't forget, by the way, guys, in the end of the year, this is the first year with lower tax brackets and some new changes as far as how you take capital gains and losses. So you're going to have people that say maybe the end of the year, oh, enough is enough, right? We haven't seen that in a while, so we might just do a separate video on that. But anyways, I can't tell you what to do with your shares. If you're just joining us, I am not able to give specific advice. We are financial advisors, SEC registered financial advisors that cannot actually I can give specific advice to customers, but of course I cannot give general advice. It's called the suitability rule, and if the SEC is watching right now, we're following the rule. We've done good with you guys, and we want to keep it that way. So thanks for all the good stuff today. If you have a moment, if I helped you, if you like the scrolly thing at the bottom, if you like the hoodie, just hit the subscribe button. That's all I ask for. I do want to speak in front of all of the industry. If you are one of the conference holders for next year, financial advisors, I want to explain to the new and upcoming financial advisors how people care about their investments, their retirement, getting their dough straight. I want to share that with them. So right now they don't take me very seriously, but as we grow, hopefully they will. And so if you'll hit the subscribe button, I can then use that. I can use the data from the videos and everything to sort of fight my way into a speaker role at some of these conferences next year. So far, so good, but I really appreciate it. If you're one of our customers, we'll see you in just a few hours. We're going to do a class on sector ETFs where we use the whiteboard. We have a glass of wine. Come relax with me a little bit. And I may be sharing something very, very cool for us. You might not think it's too cool, but I've got some really, really good news, and I want to share it with the customers first so you guys know what's about to happen here at Jazz Wealth. I appreciate it. Thanks so much for watching. We'll see you later.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interests comes before ours.